All right, let's dive into Apple. The company behind those sleek iPhones and Macs, right? But we're not here to just admire their design. You sent over a fascinating report, and it's full of financial data, future predictions, even some insights into their competitors, Samsung, Google, Microsoft, the whole gang.
So
Yeah,
they're ready for
that,
some surprises as we put on our value investor hats and see if Apple stock is actually worth the hype in 2025.
yeah, I think that's key, right? Because most people just think of Apple as the cool gadget maker,
Yeah.
but we're going deeper. We're looking at their financials to see if the company's performance actually lives up to its shiny reputation.
Okay, so let's rewind a bit. How has Apple been doing financially over the past 5 years?
Well, in 2021, their revenue just exploded, growing by a massive 33.26%. But things have calmed down a bit since then, with growth slowing down in 2022 and even dipping a little in 2023.
So is this a sign that the magic is fading? Is the smartphone market, where Apple makes most of their money, is it starting to mature? That's the big question, right? And one that any smart value investor would be asking because as markets mature, it's natural for growth to slow. But here's the interesting thing. Despite this slowdown, Apple has been consistently profitable. Their net profit margin has stayed above 20% for the past 5 years.
It's pretty amazing. It means for every $100 in sales, they're keeping at least $20 in profit. So they must be really good at managing costs and setting prices.
Absolutely. They've mastered the art of charging premium prices without scaring away customers. But hold on, there's a twist. Their earnings per share. EPS, it's like the profit for each share of stock. Well, it actually dipped a bit in 2024.
Hmm. Okay, a little mystery to solve. What could be behind that dip in earnings?
We'll get to that. But first, let's not forget that Apple has been consistently rewarding its shareholders with, those steadily increasing dividends over the past 5 years.
Music to any investor's ears, right? Those consistent dividends are a great sign that a company is confident about its future and committed to its investors.
Exactly. And speaking of financial strength, their cash position is phenomenal. Just look at their market capitalization. It reached a mind-blowing $3.92 trillion as of December 2024. That's like the GDP of a whole country.
Wow, that's a lot of money. But they do have quite a bit of debt too, right? Is that something to worry about?
It's definitely something to keep an eye on, while they seem to be managing it. Well, now high debt levels can become a problem if things go south.
Okay, so we've got a sense of Apple's financial health. Now let's put on those value investor glasses and see if their stock is actually a good buy. Where do we even begin?
Well, a key metric for value investors is the price to earnings ratio, or PE ratio. It basically tells you how much you're paying for every dollar of Apple's earnings.
So a high PE ratio means you're paying a lot for each dollar of profit, right?
Exactly. And as of March 3rd, 2025, Apple's PE ratio is 37.66.
Whoa, that does seem high. What's a typical PE ratio for comparison?
Well, their own 10-year historical average is 22.06, and the average for the tech industry is even lower, around 5.9.
Okay, so that's a bit of a red flag. Is the market overvaluing Apple, or are they just that exceptional?
It's a crucial question, and it's not just the PE ratio that's high, their price-to-book ratio, the PB ratio, which compares the market value to the book value. Well, that's also way up there at 54.4, while the industry average is more modest, 3.4.
So two potential signs of overvaluation. It's like the market is so in love with Apple that they're willing to pay a premium no matter what, but their return on equity or ROE is really high, isn't it? Doesn't that mean they're incredibly efficient at making money for their shareholders?
Absolutely. Their ROE is an impressive 145.35%. It shows just how good they are at turning investments into profit. It's like they have a secret formula.
There's a real head scratcher.
Sure.
Those super high PE and PB ratios hint at overvaluation, but then that phenomenal ROE suggests they're a profit-generating machine, like they're breaking the rules of finance.
It's a puzzle for sure to solve it. We need to look beyond just these single numbers. We need to consider their free cash flow, the cash they have left over after paying for their operations and investments.
Mm.
It tells us how much financial flexibility they have and their ability to, invest in future growth.
Right, so how does Apple look in terms of free cash flow?
Well, it's been fluctuating. It did increase by 9.26% in 2024, reaching $108.807 billion, which is a positive sign, but it's important to watch those trends. Any dips could signal potential issues.
All right, so we've got some mixed signals here, but before we get lost in all these numbers, let's step back and think about what makes Apple, how do they stand out in the competitive world of tech?
Their secret weapon is their differentiation strategy. They've built a brand that's all about sleek design, that seamless integration between their products, and a reputation for pushing the boundaries of technology.
Yeah, they've created their own universe, right?
Uh,
And people want to be a part of it. They're not just selling phones and computers, they're selling an experience, a lifestyle, and they can charge a premium for that.
Exactly. It's the Apple Premium people are willing to pay more for products that are seen as high quality, beautifully designed and part of that exclusive ecosystem. And that strategy has helped them build an incredibly loyal customer base, which is a huge advantage in today's market. People don't just buy Apple, they become Apple users.
Speaking of the future, what's next for Apple? The report mentioned some exciting upcoming product launches like those new iPhones and augmented reality or AR devices, and they're also jumping into the world of AI. Are these just flashy trends, or do they have the potential to really drive growth?
This is where things get really interesting. These aren't just gimmicks. They represent significant advances in technology that could change entire industries. And Apple, with their history of innovation and their vast resources, well, they're in a great position to lead the way.
It's like watching a tech giant awaken, right? Imagine iPhones that seamlessly blend the digital and physical worlds through AI-powered assistants that know what you need before you even ask. It's like something straight out of a sci-fi movie.
And it's not just about new gadgets. Apple has been quietly building their services segment, things like Apple Music, Apple Pay, and iCloud, all based on that subscription model that's becoming so popular.
Right. They're creating an entire ecosystem of services that keeps users hooked and generates that recurring revenue. It's like having a loyal following that pays a monthly fee just to be a part of the club.
Exactly. And this services segment has the potential to become an even bigger part of their business in the future. It's a steady stream of income that's less dependent on the ups and downs of the hardware market, you know?
Okay, so we've got those groundbreaking new products, a rapidly growing services business, but are they forgetting about the rest of the world?
Not at all. The report highlights the huge growth potential in emerging markets like India and Southeast Asia. These markets represent a massive, untapped customer base that's eager for the latest technology and wants to join that Apple ecosystem.
It's like discovering a whole new continent of potential Apple fans.
And let's not forget about their commitment to sustainability, which is becoming more and more important to consumers, especially younger generations. It's not just good for the planet, it's good for business as well.
So lots of potential for growth, but there must be challenges too, right?
Right.
No company is immune to competition and those market forces.
You're absolutely right. In the tech world, things can change in the blink of an eye. Let's talk about some of those risks and challenges that Apple might face in the coming years.
Let's do it. I'm all ears.
Welcome back to our deep dive into Apple. Before the break, we were talking about how bright their future looks. But remember, no company is invincible, especially in the fast-paced world of technology.
Yeah. So let's be a little skeptical for a moment and think about the things that could trip up even a giant like Apple. Where should we start?
Well, one big concern is the competition.
Yeah.
Apple's not playing alone. They're in a fierce battle with some really tough rivals like Samsung, Google, and Microsoft.
All right. And each of those companies has their own strengths.
Yeah.
Samsung is known for having a ton of different products. Google dominates search, and Android and Microsoft is a powerhouse in software and cloud computing. How can Apple stay ahead of those guys?
That's the billion-dollar question, right? They need to keep innovating,
Yeah.
keep coming up with products and services that are not just good, but exceptional. If they fall behind in terms of features, performance, or price, they risk losing customers to these hungry competitors.
And what about the global economy? We've seen some crazy things lately with inflation, supply chain issues, and even talk of a recession. Could those big economic forces hurt Apple's plans?
Absolutely. Economic downturns can make people think twice about spending, and those premium-priced iPhones might be the first thing to go from their budgets.
Yeah.
It's a reminder that even the biggest companies aren't immune to economic forces.
It's like a storm that can shake even the strongest ship. And speaking of storms, what about those regulatory headwinds we mentioned earlier? Governments are really scrutinizing big tech companies these days,
Yeah.
and Apple is right in the spotlight.
That's a valid concern for sure. Antitrust lawsuits, privacy regulations, app store fees. It's a whole web of legal and regulatory challenges that could really impact Apple's ability to operate and make money.
The report mentioned a potential antitrust fine from the French regulator related to Apple's app tracking transparency feature, the one that limits how apps can track user data.
Yeah.
It seems like privacy is becoming a huge battleground for tech companies.
It definitely is, and Apple's walking a fine line here. They want to be seen as the good guys protecting privacy, but they also need data to personalize their services, and target advertising. Finding the right balance is crucial.
Okay, so lots of potential problems, but before we get too pessimistic, let's remember that Apple is really good at adapting. They've survived tough times before and come out stronger. What are some signs that they're handling these challenges and staying ahead of the game?
Well, one key indicator will be the success of their new products. Are those new iPhones and AR devices truly groundbreaking, or are they just minor updates? Do they capture people's imagination and create that excitement that Apple is known for?
Right? Because let's face it, not every Apple product has been a hit. They've had some slops along the way, but when they get it right, it's magical.
Exactly. We'll be watching closely to see if they can keep that magic going. And beyond individual products, we'll be looking at their overall strategy. Are they successfully growing their services segment and getting those recurring revenue streams? Are they making progress in those emerging markets, attracting millions of new customers to the Apple world?
It's like a chess game.
Right.
They need to anticipate their opponent's moves, adapt to the changing market, and always be a few steps ahead.
Exactly. And they need to do all of this while dealing with regulations and keeping their customers happy and engaged. It's a tough balancing act, but if anyone can do it, it's probably Apple.
Okay, so we've talked about the risks, the potential for growth, and the challenges of staying ahead in this constantly changing industry. But let's not forget the big picture. We started this deep dive with a hold recommendation for Apple stock in 2025. Does all this new information change that outlook?
It's time to revisit that recommendation with everything we've learned. Remember, a hold isn't just a passive stance. It's about actively monitoring the situation, weighing the pros and cons, and being ready to adjust your strategy if needed.
So imagine you're an investor sitting at your computer looking at that Apple stock ticker. What are the key questions you should be asking yourself?
The first question is, do you believe in Apple's long-term growth story? Are you convinced that they can keep innovating and expand their reach and make money for shareholders even as the tech world changes and evolves?
Because if you don't believe in the story, then it doesn't matter how good their financials look or how much cash they have. You need to have faith in their ability to adapt and thrive in the face of challenges.
Exactly. And the second question is, are you comfortable with their current valuation? Are you willing to pay a premium for a company that's seen as a market leader, even if it means taking on more risk? Or are you looking for a bargain, a stock that's undervalued and has the potential to make you a lot of money? It's the classic dilemma for investors, right? Balancing potential for growth with how much something is worth. Sometimes you have to pay more for quality, but you don't want to overpay and end up with a stock that's not as great as everyone says it is.
And finally, you need to think about how Apple fits into your overall investment strategy. Are you looking for a safe and stable stock to anchor your portfolio, providing steady growth and dividends over the long term? Or are you looking for more aggressive growth opportunities, companies that are pushing boundaries and could make you a lot of money quickly, but also have more risk?
It's all about finding the right mix of investments that match your goals, your risk tolerance, and your time horizon. There's no one-size-fits-all approach. It's about tailoring your portfolio to your own needs and circumstances.
And remember, these are tough questions with no easy answers. There's no magic formula or crystal ball to predict the future of the stock market. The best we can do is gather information, analyze the data, weigh the risks and rewards, and make smart decisions based on our own judgment and research. And sometimes, even with all the research in the world, the best decision is to just wait and see how things play out. The market is constantly changing, and new information pops up every day. There's no shame in taking a step back, watching the trends, and waiting for a clearer signal before making a move.
That's a great point. Patience is often overlooked in investing. It's tempting to jump on the bandwagon, chase the latest hot stock, or react to every little market fluctuation. But sometimes the smartest thing to do is just wait, observe, and gather more information before making a decision.
All right, so we've covered a lot, but there's still one important piece missing. We've talked about Apple's strengths, their potential for growth, and the challenges they face. But every company, even a giant like Apple, has weaknesses. What are some of their potential vulnerabilities that investors should be aware of?
That's a crucial question, and one that often gets overlooked when people get excited about a company's potential. Let's explore some of those weaknesses and think about how they might affect Apple's future.
Let's do it. No company is perfect. And understanding those imperfections is just as important as recognizing their strengths. Okay, so we're back, and we've spent the last two parts of this deep dive really getting to know Apple, their financials, their growth strategies, and even those potential risks. But now let's get practical. We know their stock is a hold right now, but what does that actually mean for you as an investor?
Yeah, a hold recommendation can sometimes feel a little bit like a shrug, like we're saying, hey, we're not sure, but it's a much more thoughtful decision than that.
Right. It's not about being indecisive. It's about recognizing that there are good arguments both for and against investing in Apple right now.
Exactly. And it's important to remember that a hold isn't forever. It's an ongoing assessment that can change as new information comes out and the market shifts.
So let's say you're an investor with your finger hovering over that buy button, or maybe you already own some Apple stock and you're wondering if it's time to sell. What are the key things you should be thinking about right now?
Well, one of the biggest things is Apple's reliance on the iPhone. It's still their star product,
Yeah,
their cash cow. And it brings in a huge portion of their revenue.
that makes sense. The iPhone is like their icon, right? Practically synonymous with Apple. But wouldn't that make them vulnerable if they depend so much on one product?
It's definitely a two-sided coin. On one side, the iPhone is a proven winner that makes a ton of money. But what if the smartphone market shrinks or a new competitor comes along with a phone that's just as good or even better than the iPhone, but cheaper?
That's a scary thought for an Apple investor, right? It's like putting all your eggs in one basket, even if it's a very fancy high-tech basket.
Now, we talked about how people are holding on to their phones longer these days, right? Those upgrade cycles are slowing down, and that could really hurt iPhone sales.
So maybe that incredible growth in Apple services isn't just a nice bonus.
Hmm.
It's essential. They need to diversify and not rely so much on one product, no matter how successful it's been.
Absolutely. They need to show everyone that they're more than just the iPhone company, that they can keep innovating and growing their ecosystem and capture those new markets.
And let's not forget about those really high valuation numbers we discussed earlier.
Mm.
The market is clearly betting on Apple's future success. But is that bet a good one?
That's the big question, right? Value investors always want a margin of safety, a discount between what they pay for a stock and what they think the company's actually worth. And with Apple, that margin of safety is pretty thin right now.
It's like they're priced for perfection, but no company is perfect. So are those expectations realistic, or is the market setting Apple up for a disappointment?
Only time will tell, but it's something every investor needs to think about carefully. And remember, the market can change quickly. A few bad earnings reports, a failed product launch, a bit of bad news, and that stock price could drop.
So it's not just about the numbers. It's about understanding the story behind those numbers, right? What's the story the market is telling about Apple, and do you believe it?
Exactly. And part of that story is about Apple's ability to adapt to change, to stay ahead of the game in this fast-paced tech world. Think about the big changes we've seen lately: cloud computing, mobile devices, artificial intelligence. Can Apple keep winning in this new era of technology?
They've certainly been good at reinventing themselves in the past. Look at how they went from the iPod to the iPhone, or how they've embraced services like Apple Music and Apple Pay. They're not afraid to change, even if it means replacing their own products.
That's a really important point. They're willing to disrupt themselves before someone else does. But it's not just about the technology. It's about understanding how culture and society are changing too. Consumers are becoming more picky, more demanding, and more aware of how technology affects their lives.
Right, it's not just about the features anymore. People care about privacy, sustainability, ethics. Can Apple keep its image as a company that's not just innovative, but also responsible?
That's a challenge for any big company, but it's especially crucial for Apple because their brand is all about trust and shared values. They need to show their customers that they're listening, taking those concerns seriously, and building a future that's not just technologically advanced, but also good for society.
So is Apple a sleeping giant ready to jump ahead with new innovations and conquer new markets? Or are they starting to slow down, struggling to keep up in a world that's changing so fast?
That's the question every investor is asking themselves, right? And there's no simple answer. We've given you the tools, the insights, and the information you need to start forming your own opinion.
We've looked at their financials, broken down their strategies, weighed the risks and the rewards. Now it's your turn to decide.
And remember, investing is a journey, not a destination. And with a company as exciting and influential as Apple, that journey is bound to be full of unexpected turns and surprises.
So buckle up, keep thinking critically, and most importantly, never stop learning. The world of investing is always changing, and the more you know, the better you'll be able to handle those changes and reach your financial goals.
And never forget, the best investment you can make is in yourself.
That's a great point to end on. Thanks for joining us on this deep dive into Apple. We hope you found it valuable, insightful, and maybe even a little bit inspiring. Until next time, happy investing.